Hello, everybody. Joe Malone here, coming to you live on Dallas Trading Floor. It is Monday, and looks like the market has tanked a little bit. What happened was, the war fears with Russia and Ukraine seem to be really holding the market back, and that's it's not a good thing. Um, so the market kind of faded as of late, and along with inflation, war drums, all kinds of things going on. It's the market is very very skittish right now, and it's a tough market to trade just because there's external events are just sort of making it very very difficult to to trade. The the um, the market basically it moved a little bit lower. So let's kind of take a look at the Nasdaq first. That's the kind of the one that really want to kind of really really key in on, because that's where most of the growth stocks are. And what's happened here with the Nasdaq is that we thought we were going to get some support. We had we'd come all the way down to 1300. We were starting our way back up, and then boom, it just definitely has been difficult, and it looks like we may be in a little bit of a more of a downtrend. Just wanted to put this out. Basically, we are in an uptrend under pressure, meaning that we had up until Friday, we had we had a great we were starting to make a move up, and we did have a fall through day, but it does look like that we've come back down, and boy, oh boy, we're in an uptrend under pressure. Did send out a invite to everybody on Friday, basically on the action trade alerts. If you want to get on this, easy to do. Just go to www Dallas Trading Floor, and we'll put you on it. But basically, the key on Friday the key was that we moved into this uptrend under pressure. When you're in an uptrend under pressure, there are certain things that you want to do, and one of them, of course, is to reduce your positions, take your profits if you have them, and kind of get back into cash. Unfortunately, that's sort of what I did. Now I was stopped out of Apple today. Surprise, surprise! I was stopped out of Apple, and it has recovered a little bit. It did recover a little bit at the end of the day, but I was stopped out of Apple's off a little bit in after hours, and I did have this did have the stop loss in there, and my stop loss was right at 165. We went down and then we came back up. So I'm out. I'm out of Apple. It closed at 168, which is a good thing. Kind of give you an idea of the 60-minute chart here. We came down, and let's go to a little bit. Let's go to the 15-minute chart. Kind of give you an idea of what happened. It came down, and it briefly came down to 165. That's where I was stopped out, and then boom, it came back up. So it definitely has some support, but again, with this news, we don't know what's going to happen in the Ukraine, and it would be probably a situation where it's gonna make a big it's definitely weighing on the market. There's no question about it, and it's just one of those things. Also wanted to show you kind of the Invesco QQQ. Of course, it bounced a little bit after hours, and it did move up. Now, the key with the Invesco QQQ, this is the Nasdaq 100 ETF, and I definitely like to look at this one to kind of see what the overall market is. But right now, it has definitely been lower. So let's also look. I want to kind of take a look at the S&P 500. Because that's a key level as well. Let's see how that was did today. And I don't think it, again, also we're seeing that red there. Definitely don't want to see that, but we definitely are below that 200-day moving average. So the S&P was weak as well, and we did recover a little bit at the end of the day. But man, I'm telling you, not a lot of stuff to work with there. Also, wanted to kind of show you the positions that I'm in currently. As I said, I am out of Apple, and but I did have some good. We did have a bounce on Google, which of course is Alphabet. I should say the correct word. It pulled back pretty low. I mean, but I still believe in it. Well, at least for right now. and and so I'm definitely in Google. We definitely got some support at the 200-day line. Just kind of want to show you that it bounced right at that 200-day line. So that's significant. I mean, hopefully this will start to turn. It will get support at the 200-day and then move higher. Just want to kind of show you the 15-minute chart, and we definitely did get some support right here, basically at about a little bit about 26.75 is sort of where we got support, and I have been pretty. I'm going to reactivate the alert here at 2,700. This seems to be sort of a place where it does have some support. So hopefully we're going to get a reversal there. I definitely would like to see that. Also wanted to show you the high-low. Now this is kind of an interesting indicator. This is an indicator of stocks high, stocks low. Currently we are much low. Many stocks are lower than are higher. Obviously, we have for every one stock. For basically every one stock up, we're basically, at the point where we have 4 to 4.5 down. So it did kind of make a bottom, and that's the reason why we moved from a confirmed uptrend to an uptrend under pressure. So we're still, it's still kind of dicey in terms of that. So really the best thing to do right now is to remain relatively strongly in cash, and that's probably your best bet. Now, I just want to show you the stock of the day, because that's kind of cool, and that is Boyd Gaming, and they're doing quite well with the reopening trade. Symbol on that BYD. The question is it viable here? Well, let's go to the charts to see kind of what we can look for with Boyd. BYD, of course, is the symbol there, and going to the daily chart, this one does have a double bottom pattern, which is a very, very good pattern. It's a very strong pattern. We came up above the buy point, 66.99 being that buy point. We did pull back a little bit from here, but this is actually right now in a buy zone. So this is something that if you need to go, if you want to just put your little pinky in the water. I don't have this one currently, but I'm definitely considering it because I do like this as a reopening trade. I think some of the Vegas stocks are going to do well. The only thing this one, of course, is missing on is earnings, and that's really due to the fact of the pandemic. And it's a domestic stock, not a lot. And the great thing about this one, as opposed to some of the other gaming stocks, is that it does not have China exposure. So, if people do decide to go on vacation, Vegas is probably going to be one of the better places because, of course, it's it's domestic. It doesn't have that China China exposure. So it's looking pretty decent on the pattern rack. We are just 2% above the pivot. You definitely could consider entering a position here. I wouldn't enter a full position. This is a tough market to trade, but a lot of things are going for this stock. And on the technicals, it's above all of the major indexes: the 200-day, the 50, the 21, and the 10. So this is looking very strong as a stock. By the way, I did put out a trade today, which is kind of an interesting trade. It is an Iron Condor, and basically this is an options trade. Kind of want to share it with everyone here, and that is basically an options trade that I did on Etsy, and Etsy was a high flyer. Was a high flyer, but has kind of come onto hard times. Now they're going to have earnings in 10 days, and that's we'll see how that evens out. At the close, let's see, it closed at 142.86. It was up 21 cents. So this is the Iron Condor, and what this is I do think that we probably will see a drop on it after earnings, but right now we do have protection to both the upside and to the downside. If you're interested in taking a look at this this trade, it's super easy to get to. All you have to do is go to www.Dallas Trading Floor and hit the link there, and you should be good to go with this trade. Also, if you're looking on TikTok, very easy to do. Just hit the profile, and you'll go directly to the area where you could take a look at this trade in full. It's the Iron Condor on it's the Iron Condor on Etsy. So that's definitely something that you might want to look at. As you can see, Etsy has been trading down. That's the reason for the trade like this. It's been trading down, but we do think that it may be volatile. So this is basically a 30-day trade where you can essentially double your money on the risk. So it's a pretty good one. This gives you kind of a look-see of the Iron Condor. This is sort of the shape of the trade. So very interesting. Interesting. If you're interested in it, super easy. All you have to do is just go to www.Dallas Trading Floor, and it will be the second after the it's a second button on the trade there. So pretty good one, and hopefully it will work out, and we will see it. I'll be updating you on this. I'll probably put a little video out on this. All right, Jay has a question here, and he's looking to see how Nvidia is holding up in this sort of, I guess, Putin market, because unfortunately in this country, we're not really in the U.S. really not in control of things. It's really Russia that's leading right now, going probably, hopefully not, but probably going to war with the Ukraine, which kind of stinks. But that's sort of the way it's looking. Let's take a look for Jay and see. I do think I was considering putting a Iron Condor in this one too. We have earnings in just 2 days. I decided that I wanted to have a little bit more time for this one to work. So what I'm going to do here is I'm going to I have a lot of notes on this stock, of course, but I'm just going to take off some of those notes so we can kind of really get a good look at this potential on Nvidia. Nvidia, great company. Semiconductor fabless has been doing very, very well, but in this market, it just is not a slam dunk like it was before. I definitely think they're going to have good earnings. I have no doubt that they're going to have good earnings. That's what I'm expecting. But if they miss, it could be deadly. I mean, it could be deadly. Let's kind of go over and take a look at some of the fundamentals on Nvidia. This is one of my favorite stocks. I'm currently not in it. I did have a bull trade on it, which in this market is, and I closed it for a profit. So I definitely like that. Look at these numbers. They're just incredible. By the way, they are, you might want to also look at AMD, because they inked a deal with Xilinx. So they're going to buy Xilinx for some incredible amount of money. I don't quite know what it is, but it's a lot of money. Anyways, look at this. On the fundamentals, Nvidia is peerless. I mean, look at this. Up 50%, 68, 64, 84, 61. So we've got the sales moving up and the profits are moving up too. This actually, considering everything, now it does have a relatively high PE ratio, and right now these high PE ratio stocks have been punished. But 242, I definitely think it's going to hold the 200-day line basically, and I'm just going to take a look to see exactly where that 200-day line is. 230. So basically on the fundamentals, this is the 40-week line, because of course this is the weekly chart, but it's right above that, so it's lower than the 10-week, so it's pulling back. I do think if they do have some good earnings, very likely to go higher. But in this market, we're seeing a lot of the funds selling into strength. The market is very skittish right now, so it's tough to make it ends meet. All right, let's take a look at TikTok. Thank you very much. Happy gold went up. I'm happy gold went up. Let's take a look at GLD, which is, of course, the tracking ETF that tracks the price of gold. And this is right now at a buy point. Now, I'm not a big gold bug, but in this situation, maybe there's something to it. Maybe there's something to it. I don't know. We're right at 174.67. That's the buy point for this ETF, which tracks the price of gold, GLD. And it's definitely maybe making its run. You don't know. I mean, it's been stuck for a long time, and this might be, with potential war, this might be what puts it over. Of course, we've got a lot of inflation fears in this country too, and that is weighing on the market as well. One stock I kind of want to look at just for fun is LNG, and this is Cheniere. Now, I do own this one. This is in the natural gas liquefaction business. Now, with potential war in Europe, their supplies are going to be cut short, probably with the pipeline, the Nord pipeline that goes into Germany. There is one company that's in a position to take advantage of this, of course, and there's other ones as well, but this one is particularly well situated. It's a company out of Houston called Cheniere Energy, and basically what they do is that they take natural gas from the Permian Basin and also from other oil fields in Louisiana, and they liquefy it, and it can be exported that way to places like Europe, which are basically dependent almost solely on the Russians for their supply. So if that gets cut off, this one could do very, very well. You never can tell with geopolitical events. They've got earnings in 10 days, but I'm probably going to look. When after earnings, I may look to increase my position here, just because of look at these sales. They're moving up 14%, not much, but 28%, and then 119%, and now we're starting to see some movement. The issue with this one, of course, is that it's still paying off some debt, so it's not necessarily profitable. But I do think that with potential, we're going to see an awful lot of sales from this company. So that's kind of my take on it. Is it viable? Well, it's a little extended, unfortunately, but it's still in the buy zone, believe it or not. And just kind of want to show you this. It's basically just right at the 10-day line. So can you buy this? Well, I would be a little bit, I bought it a little bit early. We're 3% above the pivot, so we're in the buy zone technically. So this could be bought, but I wouldn't be going in with a full position. I would probably go with a half position. But if we do have war, which I don't want, obviously, this one could be potentially a big gainer. Based on the fact that there's going to be a difficulty in with energy supplies primarily in Europe. So not a good situation, but that one could benefit. All right, let's look at AAP. Thank you, Ava. Let's look at AAP. I think you mean Apple? AAPL, maybe Apple? Would that be correct? Or AAP? Let's just see AAP. Oh, Advanced Auto Parts. I'm sorry. Yes, Advanced Auto Parts. This is not a bad one. I'm currently not in any of the automotive stocks right now, but Advanced Auto Parts will do well in this kind of situation where we have, where we have limited production of vehicles, and that is a problem right now. There's a supply chain issue. So used cars prices are going up. And also the companies like O'Reilly and Advanced Auto Parts are doing very, very well right now because people are repairing their cars rather than buying new. It's in basically it's in a consolidation, and it is the low side of the consolidation. So it is not necessarily viable. You want to possibly wait until it reverses. So this is not a good buy point for it, but it does have a very, very good checklist. So here's what I would recommend on Advanced Auto Parts. I would recommend basically putting it on the watch list and seeing if we can get a reversal. It does kind of look like the beginnings of one, but we're not totally we're not, that's not totally the case right now. It is above the 200-day line, which is good. We never want to buy below that 200-day line. It's 3.71% above the 200-day line, but we're below the 50, the 21, and the 10. So we really want to see more strength because it still could pull back down below that 200-day line. So right now, what the best thing to do on this probably is going to be to do it on a watch list situation, where this is a watch list stock for now. But I would get ready to buy it if it does move above that pivot at 244. So right now, this is Advanced Auto Parts. Right now, Advanced Auto Parts is basically is basically a watch list stock. So this is basically a watch list stock, and really you want to see this have a little bit more strength and move above the reversal line. What I'm going to do here is I'm going to draw a reversal line to see if we can come above this, because right now we're in a downward trend. We want to see it move above that reversal line. What I'm going to do here is I'm going to set a price alert on that. So it needs to come above about 218. Really, it needs to show strength. I'm sorry, not 218. It needs to come above. it needs really to come above and start an upward trend. Currently, we're in a downward trend with the stock, but if it reverses and it moves higher, that's where we could possibly get in. So it's really a watch list for now. I would not be a buyer at this level. All right, what's your take on Tesla? Okay, well, of course, this has been one of my favorite stocks, Tesla. A lot of other people. I'm currently out of it. I don't have a position in Tesla, as we are still below the 200-day moving average. We're still below the reversal line. This dotted line that I put in here. We did have some strength, but it seems to be hugging this 200-day moving average. So right now, and this is very, very hard. Here's my take on Tesla. My take on Tesla is we're in a consolidation period. I'm going to the weekly chart here, but we did have this. We did break out at 900. It went up, and then there was another pivot at 1201. It did not succeed. It then pulled all the way back, and now it's below 900. So I do think we're going to get some support here, but this has got a base. So probably we're looking at least 3 or 4 months or more of period where you really can't buy it. It's got to form a base so that it can move up. The way CAN-SLIM investing works is stocks create a base, they come up to a pivot, they then either move past the pivot or fail, and then they go to the next step. So it's like a stair step here, stair step there. So what happens is we stepped up above 900, and that was good, up to 1200. We were rejected there. So now we've come down below that 900. So basically what's got to happen, we've got to have a base, and then we've got to come up basically to about 900 and then hold it, and then we can go up. So right now with Tesla, it's not viable right now. It's a watch list for right now. This is a tough market to trade in. I'll be honest with you. We're not in a confirmed uptrend right now. We're in an uptrend under pressure. So it's a lot more difficult to trade in this market. Many of my positions are short positions, and using primarily options. That's one of the reasons why I did put out there today. By the way, if you're interested in this, super easy to get. All you have to do is go to www.Dallas Trading Floor to see the Iron Condor on Etsy. But many of the leaders now are not doing as well, and so we have to be a little bit more careful in this market. So right now with Tesla, I think it's really a watch list right now. I wouldn't be running to get in it as much. By the way, this is a person that says we can't see your charts, and you're absolutely right. What you got to do to see the charts is you got to go to this up here, and what that'll do is that'll let you go and see the charts that are on YouTube. Unfortunately, I can't display the charts on TikTok. It's tragedy, but hopefully soon I will be able to show you the charts as I'm presenting them. But right now, unfortunately, the best way to see them is just to go to my profile and then click on that, and then you'll be able to see. Scroll all the way down, and there's a live feed of YouTube where you can see the charts. So I appreciate that very, very much. All right, gold went up. All right, of course. The instant I'm old enough to trade the greatest bull market in history. Yeah, that's true. I mean, it's just one of those things. It's just one of those things that it's just one of those things, unfortunately. Gold is definitely going up, but I'd be a little bit careful. I want to see it move with a little bit more conviction before we jump into it. But I will definitely. I think that gold is with the talk right now of regulation of with the talk of regulation of of crypto, gold is. I mean, I think people are starting to come home to gold. So who knows? Let's take a look at Google, and of course, I own Google. I own a relatively significant position in Google. I do think that long term it will do well because of the 20-to-1 split. That typically has been the catalyst for many good moves. It did see some support at the 200-day moving average, as you can see. It did get some support there, and hopefully it's going to move up. It's off a little bit after hours, but it seems like 2,700 is a magical number for Google stock. Of course, what instigated this was their excellent earnings, and I do think that even with the pandemic, even with inflation, Google is very, very well positioned to be very, very powerful and potentially join the $3 trillion club. Of course, Apple is basically in that club, and really Microsoft is, and I think Google probably will be as well after the split. So that's part of the reason I'm I'm bullish on Google right now. Let's look at AMD. Now AMD did merge with Xilinx. I mean, actually they bought Xilinx. Excuse me, they didn't merge, and I think that long term. That's going to be a good acquisition. The biggest problem right now in the semis is just this market. I mean, this market just is brutal, and it's just not rewarding what I consider to be standout stocks. And AMD definitely falls in that category. But it's basically flirting with the 200-day line, which if this was any normal market, it would be way above this. But because we are basically in a very tentative market right now, it's tough to trade, and a lot of these are just really tough to trade. Basically, we're right at the pivot on the double bottom. It is buyable at this level. It would be a strange place to buy it here. I don't know if you could really buy it here. It was basically this was the pivot about 83 days ago. So 114 seems to be a very important number for. It seems to be a very, very important number for AMD. And as you can see, it really is a continuation of this line across here. So basically, this is sort of, hopefully it gets support here. I want to see it move above this. I want to see it move above this, really, because this is going to be, this is going to be the key, I think, to see if it starts to change direction. Currently, it's in a downward trend. AMD is currently in downward trend, but I think if it can move past this 114, that's the pivot. This is the old pivot back here. Then I think that we're going to start to see it move higher. But right now, tough to buy here because we're in a little bit of a downtrend. So it's just not an easy thing to buy right now. But it definitely is got a good checklist, 78%. That's excellent. And looking at the fundamentals, AMD looks very, very strong. I mean, you've got sales that are moving up 49%, 54%, 99%, and all, and profits that are just, stellar. Still, even with all that, and a relatively low PE ratio for a semiconductor stock, 40, it's having difficulty. I mean, the market is just punishing it's just punishing stocks like this, which is so strange. But there's in this kind of market, the market doesn't really it wants to see profits right now, and in that sense, I mean, we're seeing a reversion, I think, to some of the old standby stocks. Here's one, of course, that I had a bear. I did close this trade on. I had a bear. A bull put spread on this one, and it's Exxon. Believe it or not. I mean, I don't think I've had owned Exxon in years, but this is what the market seems to be liking right now. Very strong cash flow, of course. Look at that, $10 a share cash flow, and it's basically an $80 stock. So that's a lot of cash flow. 14% return on the equity. Now, I'm not necessarily recommending it, but this is what the market seems to want right now, and it seems to want these big cap, these big cap oils. That seems to be where it's at. Now, I also put out that I have been looking at Hess, which is, I think, a little bit better opportunity in the oils, in the integrated oils, than ExxonMobil. This one, Hess, also has some very good returns on equity, but I think it's better positioned in many ways than Exxon. But still, this one also might be something you might want to look at. Hess, we are basically, I think, right at the buy point on this one. Let's check. I have to check on this pattern rack. Yeah, 2% above the pivot in 6 weeks. Not a really great performance, but we're right at the pivot on this one as well. So that's one you might want to possibly take a look at as well. But right now, AMD, great company, but I want to see it move higher before I'm interested in buying, because it's still in a downward trend. All right, Nvidia. We talked a little bit about Nvidia. I think Nvidia is going to do quite well. I may be putting out a options trade for earnings on this one. We are expecting a pretty good, I think it's about a 10% movement. I'm going to look at this tonight to look at an options trade before earnings. I think the options are relatively expensive on this one, so don't know much. And I'll be getting back to you on that. But Nvidia, definitely, it's probably going to be very good earnings for Nvidia. Let's look at GoDaddy, GDDY. And let's kind of see. Yeah, it's just kind of weird. This is the Class A, of course, stock. And I have not traded GoDaddy. It's in one of the, unfortunately, most challenged areas, computer software enterprise area, which is, it's been taking it on the chin. So I'm not sure that I would necessarily be here. It's off of its high a little bit. Let's look at the checklist on this to see kind of what's the deal. 78, not bad, but again, here's some of the things that I don't quite like on the fundamentals here, and I just kind of want to point out to you, and that is basically that on the fundamentals we have growth in sales, but it's not above 20%, and that's something I'm really, really looking for, is heavy growth on sales. GoDaddy just doesn't have it, so I would not be a buyer of GoDaddy in this market. I mean, it's not a bad company. They have good cash flow. Their return on equity has just been stellar, but I just don't think I am a buyer of GoDaddy just based on it. I don't think it's a best in breed. I don't think it's necessarily a best in breed. Let's kind of take a look. Also, I want to look at some of the breakouts that we have. We had a lot of blue dots today, which is if you use we had a lot of blue dots. So I want to kind of look at some ones that are kind of boring companies that seem to be that seem to be doing well, and one of them on the list is McDonald's. If you can believe that. I have not been a buyer of McDonald's very much in the past. Definitely gone there too many times, that's for sure. But this is one. This is sort of a safety play. I'll be honest with you. This is a safety play, but it's very strong. I mean, it's got it's got nice cash flow, excellent return on equity, and for people that have to be in the market, I'd rather probably sit out in cash. But considering the size of this company, it's doing quite well. Seems to be the safety buy for a lot of people, McDonald's. I can't really say anything. I don't think it's a very exciting stock, but that's one you might want to kind of take a look at. Altero Resources from Jay. This, of course, is an oil AR, and this has been for the last, oh gosh, at least 6 months. This has been the area to be in, is oils, and I only have one in this area, Matador, but this is looking quite good. It's in a consolidation base, relative strength of 89. It's got an 89 checklist. On the technicals, this looks pretty good. It's above the 40. It's above the 10. If you do want to put some money to work, this is probably an area that you can, because this is a top rated area. This is, by the way, oil and gas, USX E&Ps, 4 out of 197. So this is just powerful. Just when it comes to it, it's moving higher. It's above the reversal line. It's earnings in 2 days. So that's one of the considerations that I would do about this one. Probably would not buy it until earnings. I think we want to buy it. We don't really want to buy it in front of earnings, because you can get burned buying in front of earnings. Even if everything they're firing on all cylinders, it can be bad. So be careful buying prior to earnings. Well, I would wait until Thursday possibly to buy this one, but it's looking good. I mean, I'll have to say it's looking good. Last quarter, their sales were up 40%, and their profits, and this is because of the higher price of oil, of course, 280%. So this is pretty tremendous when it comes to it. But I can't. I wouldn't, if I was the owner here, I would not sell it, but I would keep my stop loss tight, but I would not be a buyer here either, just because we've got earnings in 2 days. And the rule of thumb that I like to use here is, if you're not up 10% on the stock, consider possibly selling it or reducing your position in front of earnings, because earnings can be very, very tricky, and they can wipe you out, and so you can round trip a lot of profits. So be careful there. Do you recommend SOLX? Oh, semiconductor. Okay, yeah, the semiconductor. Let's see. Right now, I on the semiconductor plays, I like to go into the individual stocks. I would not recommend this one. This is just too much leverage. I mean, if this market were better, I would possibly look at this one. But this one's a 3x bull, and you just can't in this market. This is just absolutely a no. I just wouldn't. It's too volatile. The market is too volatile right now for 3x. So that's really the issue. That's really kind of my take on it. It's just right now, this just isn't a good time for the 3x funds. We're not in we're in a position where many of the very best stocks in this area are not doing are pulled back. You don't want to be buying probably this right now. It could be a very good addition if you had a lot of. It's a good hedging device if you have a lot of semiconductor stocks. Like, for instance, if you have a lot of semiconductor stocks. But right now, I just think you probably want to stay away from this one. This is a little bit dangerous in the present market. All right, ASAN. Let's look at. Okay, so this is enterprise software. This is one of the worst performing sectors right now, unfortunately. Now, this was one of the best performing sectors. This is why this market is not doing as well, is because many of the high flyers were in computer software enterprise just recently, and not so much anymore. Even though these guys are putting up some great numbers, I just wouldn't be in this one right now. It's not where the market is. It's not rewarding this area. It's got a negative cash flow, so this is a growth stock, and I just think you got to be careful. So here on this one, I would, and you're probably not going to like me hearing to say this, but on this one, I think you got to pass. for now. I mean, it's a watch list. It's not a buy. It just really isn't a buy. Just because of the way the market is trending. So, not a buy currently. And really, that's just the thing. It's not necessarily a bad company, but right now, the money is flowing out of issues like this. If we look at if we look at the technicals here, we are below that 40-week average. Anytime you're below that, that means the money is flowing out. Now it started to trend up. The 10-week and the 3-week are above, but right now, based on what I'm seeing in this, with the technicals here, we are trading below the 200-day moving average, and it's just I don't want to buy anything below the 200-day moving average. Now, if it can move above the 200-day moving average and show some strength, then maybe I would. But here's the issue: you see this red line? It's crossed the black line. That is the death cross right there, and that indicates weakness. So right now, this is not a buy, and this stock is weak. So this is weak action on this stock. So really, I mean, that's the thing. It's on ASAN. It's just weak action. So we probably don't want to buy this one right now if we're not in it. If you're off more than 7%, consider lowering your position in this one. This one could be problematic, but it does look like it may reverse higher. But really, right now, not a good time to be in this one, unfortunately. So there you go. All right, CAR. Let's look at that. CAR, and that is Avis. And I remember when this one went bankrupt, and then came back from the dead. They've got earnings on the 14th, so basically, earnings are due. I mean, that's due today. So I guess let's see what the after hours say. Okay, yeah, it's off. Okay, yeah, okay, no surprise. All right, we're down after hours. Apparently, they didn't really blow anything away in terms of their Well, they were up a little bit, I guess. So not too bad, but not great. I wouldn't be a buyer of this one, unfortunately. They didn't blow it out. So no, I mean it does kind of look like it's reversing higher, but based on the technicals, it just doesn't look but we are off the bottom. If you're a bottom fisher, maybe if you could have bought this at really low price, maybe. But we're up 105% in 25 weeks, which is really good. I mean, this one basically collapsed. I think it was all near bankruptcy. Anyways, I'm not sure totally about everything like this. Negative cash flow on this. Lots of funds are in it. 98% are funds. So I don't know. I don't think this is going to be. I just think this is very weak stock. I mean, it was up a lot right before earnings, and now it's off. So that tells me that those who can get out are going to try to get out. So if you're up on this one, you may want to consider taking some profits because it doesn't look that. I mean, it looks like it's going to have some issues. All right, Troy, EBON. EBON. Let's take a look there. Okay, this is a Chinese company, $1. Nah, I'd save your money. I'd save your money. Not really, maybe you can make money on this one, but boy, penny stocks right now, the China stocks are really out of favor, so I'd be real careful on this one. You could definitely double your money on this one, but you could also lose everything very quickly. It's got a 56 checklist, so just not. I don't like stocks, unfortunately, under $2. That's just not of power there. Okay, we're almost down to Lockheed Martin. Okay, you would think with all this war talk going on that Lockheed Martin would be doing great. I think it's holding its own. But LMT, you know, it's it is above the 200-day line, but would I be a buyer of Lockheed Martin at this point? Well, it did come up to this pivot here. It did come up to a pivot at 395.60, and it was rejected. So, God, do I really would I really recommend this one? It probably will do well. It probably will do well. Raytheon is probably the better buy, though. Let's look at RAY. Raytheon makes the missiles, and of course, that's what's going to sell, I think. I can't remember what that is. But Lockheed Martin, I'm pretty neutral on Lockheed Martin right now. If the U.S. gets involved, which I hope we don't, Lockheed Martin will do well. But right now, I don't know. I don't know. Do you think Ford will drop because of chip shortage? Well, they are having a lot of problems. I can guarantee you that. One of the ways that Tesla has gotten around that is that they've reprogrammed everything to use the available chips. But unfortunately, this action on Ford is not looking strong. I wish it were. Ford's one of the best companies out there when it comes to building cars, but this is just how difficult it is. We're in a downward trend, and really, most of the valuation in this sector, the automobile manufacturer, is due to Tesla. So, with Ford, good company, but I don't know. I had it a little bit after the breakout, and then I sold it. But it looks like we're in a downward trend on this one. So I would just, I probably wouldn't. I just wouldn't probably buy it. Wouldn't buy. Oh, thank you very much for correcting me. I appreciate that. It was Hertz and not Avis. I apologize. I apologize. HTZ. I knew one of them had gone bankrupt, but I appreciate that. Bring that up because, yeah, Hertz Global Holdings. Yeah, and this one's in a downward trend too. I don't know. They are probably going to get more money for the rental car rates are going up definitely because of the used car prices. And traditionally, rental car companies have been used to sop up the excess supply in cars, and there isn't really any. So now, but the problem is their costs are going up. So I'm not so sure. I'm not so sure if that's a good area right now. I'm just not so sure about it. So would I recommend that? No. I mean, it probably will succeed in terms of the leisure services better, but it's got a 44 checklist. So I wouldn't go there. I wouldn't go there with that one, unfortunately. All right. We are probably the last question. Thank you, everybody. Let's see. How does stock do what Bush declared? Oh, actually, a lot of them went down, by the way, but I'll have to research that. War typically is good for certain sectors of the economy. It typically induces inflation, and of course, we don't need any more help with that. But it caused a lot of inflation. Not quite the quarter year's inflation, but it did cause a lot of inflation. So that's a great question. This is coming from TikTok, by the way. All right, oil and gas. Oh, interesting. Troy. Unfortunately, I don't have the feed from Australia, but that's a really good question there. It's a really good question. I'll try to get back to you on that in terms of oil and gas in Australia. I think that's a really good idea. Energy. Are there any energy players like BTU? The play that I think right now is the best play in the energy sector, and I do think that this is where it's going to get the love is the Spider Select. I mean, I know this is really conservative, but the XLE, this is one that I think that you ought to look at. This is the one I think you want to own because there's a lot. The reason I think you want to own the XLE is because the XLE has been performing very, very well. Now, this is an ETF. This is not a stock. This is an ETF. So this is basically all of the oil companies, primarily the E&Ps, put together. Has a very, very large cap, $35 billion. And, of course, it doesn't have any PE because, of course, it's an ETF. But this one is something that you could look at. The relative strength on this is very, very good, 97. So this is outproducing all but 3% of all of the shares. If you look at the weekly chart on this one, you'll see this trend, and the trend is up for the Spider Select ETF. I very much like this one. You have base on base on base action, so we're seeing a lot of strength in this this one. If you want to be in the energy area and you don't want to buy it and you don't want to have the individual stock risk, this is what I would recommend is the Spider Select ETF. If you look at the monthly chart on here, you can see we were up until COVID, we were in a downward trend. So you didn't want to own this one while Trump was in office, because the price of oil was dropping while Trump was in office. But then when Biden came in and canceled the projects, it's just been going up. So I mean, I'm not a conspiracy theorist, but it seems like, oil has doubled, gasoline has doubled. This is a good way to take advantage of it, because you're certainly not going to take advantage of it at the oil pump. Would be the energy Spider Select XLE, and this is definitely a good one. And I think that it's just been strong, and I think it's going to get stronger, because I definitely think it has a runway up to over $80, because the price of oil is going up, and if it goes above $100, we will have a lot of oil companies making lots and lots of money. Okay, well, thank you everybody so much for taking a look here. Gold is going up, definitely. Oil is definitely going up. So there's a lot of challenges in the market. If you want to see how I'm playing a former high flyer, Etsy, very, very easy to do. All you have to do is to get on that list to see it is just to go over here to www.Dallas Trading Floor, and then it's just the second button. You just push on that, and then fill up your name and address, and we'll get you the slide deck on that. And I'll be putting out a video on that as well of how I'm trading that one. So thank you very much for everybody, and I will be back tomorrow at 4 o'clock. Hopefully I'll be on time at 4 o'clock tomorrow, and we'll be getting to all your questions. And thanks again, everybody. So enjoy doing this show, and I so enjoy your great questions. Also, I need your help on a few things, and one of them, of course, is I need to get a lot more likes out there, just so that I get this out to a lot of people. We have, we're growing really, really well. We've got over 100,000 people on TikTok and the thousands on YouTube, but we're trying to get out there. I'm trying to help. There's a lot of hype in the investment market. I'm not saying that I have that I have a lock on all the right things, but a lot of what you're being shown by CNBC and stuff like that is pumping stocks so that big funds can sell and leave you holding the bag. So I'm an individual investor, and I try to make it so that the small investor, is not ripped off as much as well. But I need your likes out there. That helps me get to a lot of more people. And thanks again. I'll be back tomorrow. Everybody for watching on TikTok. These shows are also on YouTube. If you want to take a look at the show with all the charts and everything, all you have to do is go to my profile, click on the link, and you'll see the YouTube feed. I'll be back tomorrow at 4 o'clock. Thanks, everybody. Please like this because it helps me get out to a lot more people. See you tomorrow at 4. Happy trading. I'm done. Oh, I got 1,500 people. That's pretty good. 1,500. I was out of juice though. I was running out of battery. I just have to. Now, I was running it on batteries. So, yeah, Pretty good. Pretty good. I think it went well. You know.